liabilities on the dissolution of firm of partner A and B. There was a contingent liability in respect of bills discounted but not matured of 18,500. An acceptor of one bill of 2,500 became insolvent and 50 paisa in a rupee was recovered. The liability of the firm on account of this bill discounted and dishonored has not so far been recorded. Okay. There was a contingent liability in respect of claim for damage for 75,000. Such liability was settled for 50,000 and paid by the partner A. Okay. The third is firm will have to pay 10,000 as compensation to an injured employee, which was a contingent liability not accepted by the firm. Okay. Okay. 5,000 for damage claimed by a customer has been disputed by the firm. It was settled at 70% by a compromise between the customer and the firm. Okay. So in all of these cases, there is a contingent liability concept. First of all, do you know what is contingent liability?
Sir, it is a liability which might occur in the future.
Yes, it depends on certain event in future.
Yes, sir.
So it will only be confirmed after happening of that event. That's why it is called contingent liability, because it is not a actual liability. Now, in first case, there was a contingent liability in respect of bills discounted but not matured of 18,500. An acceptor of one bill of 2,500 become insolvent and 50 paisa in a rupee was recovered. The liability of the firm on account of this bill discounted and dishonored has not so far been recorded. Now, first of all, this is a liability that you have to pay because you have already uh, discounted these bills from the bank, 18,500. Not all of that, but only 2,500. The acceptor of that bill became insolvent. Now he will not pay the money. Only 50 paisa in rupee was recovered. And we have recovered that because the bank will return the bill to us and collect money from us. Yes.
Yes, sir.
Okay. So the liability of the firm on account of this bill discounted and dishonored has not so far been recorded. Means we have not recorded this in our books. Now, first of all, tell me, if we have not recorded the liability in this regard, should we should firm have to pay the amount or not? Actually, in all of these questions, the problem is not related to the concept, but the wordings of the question, the details given. Yes,
Yes, sir.
it is confusing. Okay, so first of all, the 18,500 is not relevant. Only 2,500 is relevant, and we have recovered 50 paisa in a rupee, means 1,250 we have already recovered. Now we have to pay 2,500 to the bank. So we have to write this on the debit side of realization account. It will be realization account to cash account.
Okay, sir.
Okay. So actually, there is no liability recorded in regarding this. So it is unrecorded liability. Whenever there is unrecorded liability, we have to pay it. So we will pay the amount.
Okay, sir.
The next is there was a contingent liability in respect of claim for damage for 75,000. Such liability was settled for 50,000 and paid by the partner A. So it will be realization account debit to partner's capital account, means A capital.
Yes, sir.
The next is 10,000 as compensation to an injured employee. Will have to pay 10,000, which was a contingent liability not accepted by the firm. So this liability is not accepted by the firm. Okay, so this is not our liability, so we'll not record.
So no entry, sir.
Yes,
Okay, sir.
because firm will not pay this amount. The fourth one is 5,000 for damage claim, and this is settled by 70% payment. So it will be 3,500. So realization account debit to cash 3,500, 3,500. Okay.
Okay, sir. So for the first one, what will be the amount?
2,500. Actually, we have recovered 50 paise in rupee, but he became insolvent. So the bill will be dishonored and we will recover the amount by ourselves. So 1,250 will be recovered by the firm and firm has to pay 2,500 to bank.
Okay, sir.
So 2,500.
Okay, sir.
Okay. Now, is there any concept left in this chapter? Because we have completed everything. Uh, I told you about the if any asset is taken over by any liabilities.
Yes, sir.
There is no other concept left in this chapter. Yeah. Okay, so these two notes we have discussed in our previous class, deficiency in capital account brought by partner. This is the journal entry. Have we solved any big question related to this realization? All the accounts? No, I think no. In this question, we have passed the journal entry. In the previous question, we have completed only the realization account.
Yes, sir.
Concept is clear. Everything is written. Notes also covered. Okay. Okay. So we'll try a question today. Then this is the solution. In any other chapter, you don't have any problem?
Sir, in the first chapter, the fundamentals of partnership, in past
And
adjustment,
yes.
sir, in past adjustment, times I'm not sure when we have to write back the profit distributed, in which
Okay.
cases. Sometimes it is not needed, but then I take it.
Past adjustment.
Yes, sir.
Actually, I don't understand your question. Can you repeat what you have said?
Sir, in past adjustments, we have like IOC omitted or profit wrongly distributed.
Interest on capital, you were saying.
Yes, sir.
Okay. And
Profit wrongly distributed and different
yes,
adjustment. Only in some cases, we write back the profit distributed.
no,
Yes, sir.
we do in every solution. If it is incorrect, then we will write it back.
No, sir. If I don't know how to explain.
Okay, okay. Or tell me in your words.
Sir, like if it is if it is not mentioned,
Yes.
if
Okay.
if profit is not wrongly distributed, but then profit amount is mentioned in the question. At times we don't write back the profit.
Yes, yes. Okay, let me explain these things. If I clear your doubts, then okay. Otherwise, you have to repeat your question again. Okay,
Okay, sir.
because by uh, I have understood the concept that you are saying about. Okay, the first thing that there are certain errors. Let me write it here. Okay, so the format, if you remember, we prepare two columns for each partner and two columns for the form. Yes.
Yes, sir.
Okay. So let's say total partner is three. So, and so this is your detail that is particular. This is A, this is B, this is C. Okay. So to, this is form. Now A, B, C and form. Now debit credit for A, debit credit for B, and debit credit for C. Okay. So first of all, if there are certain errors, let's say interest on capital. So if we have paid wrong interest on capital, then we will first write it back in the debit side of partner. Wrong one. And credit side of firm.
Yes, sir.
And after that, we will write correct interest on capital in credit side of partner and debit side of firm.
Yes, sir.
Okay. So after this, in some of the portion, profit will be given, and in some of the portion, profit will not be given. So in first case, profit, if profit is given and interest on capital wrongly charged, then we will take that profit distribution back because it is incorrect. So again, we will take it back, wrong profit distribution, and then we will write correct profit distribution. Okay.
Okay, sir.
Okay. Now, in some of the portion, there will be no profit given. In that case, there is problem because now let's say there is nil profit. We assume that there is nil profit. There is no profit in the business now. Okay. So if you are taking back this interest and you are giving this interest, let's say total interest that you have taken back is 15,000. Okay.
Okay, sir.
And you have given only 12,000 as interest.
Okay, sir.
Now there is no other adjustment, no profit given. So profit, I assume that profit is nil. So if you take 15,000 back and 12,000 you have given the partners, then there is a balance of 3,000 profit.
Okay,
Yes.
sir. Yes,
So
sir.
this needs to be distributed between partner. And if the ratio is different, just the ratio, let's say the profit is 15,000. So we take it back and distribute it between partners. So there will be no balance because you have taken back 15,000 and you have also given 15,000.
Yes, sir.
So in this case, there will be no balance. So no distribution because you have taken back 15,000, you have also paid 15,000. So there will be no balance. That's why no distribution. But here in this case, there is a balance of 3,000 because you have taken back 15,000 and you have given only 12,000. So now there is a profit of 3,000. It will be distributed between partners. In some of the cases, you have taken back 15,000, but you have given 20,000. In that case, you have a loss of 5,000.
Okay, sir.
So it will be distributed. Now tell me, uh, is your doubt clear?
Yes, sir. Sir, in this case where both the amounts of 50,000 where there is no distribution, so there will not be any need to pass the journal entry because there is no adjustment.
No, there will be journal entry because let's understand this. Let's say that this 15,000 is distributed between partners. I'm taking the most common example. It is distributed into 2:2:1. Okay. So this is wrong. And the correct ratio is 5:3:2. So you have to take back this.
Yes, sir.
So 15,000 into 2:2:1. It will be 6,000, 6,000, and 6,000. The total in, oh, sorry, 3,000. Total in partners is 15,000. Now you have to give them in this ratio. So it will be 7,500, 4,500, and 3,000. Again 15,000. Now if you total, you can see there is a difference.
Yes, sir.
So there will be journal entry.
Okay, sir.
It will be B capital to A capital. Okay.
Okay, sir.
So journal entries are required. Now, can you tell me that from which part here your question was related with? If it is, otherwise you can ask question that it is not clear. You can say it.
Sir, it is from the profit part. My doubt was that in case they've given the profit, but they haven't mentioned that it was wrongly distributed. But then there are other adjustments too. So should we defaultly write it back and then write the
Yes,
adjusted profit?
because if profit is given, then we assume it will be distributed.
Okay, sir.
So if it is distributed between partner, then we have to take it back.
Okay, sir.
Okay. Okay, so I was sharing question of resolution. Actually, question is related with journal entry only. Okay, so here is the question. Can you see the question?
No, sir.
Now,
No, yes, sir. No, I can see.
okay. So following is the balance sheet of Arvind and Balbir as at 31st March 2016. There is some assets and liabilities. In liabilities, there is trade creditors, bills payable, Arvind and Balbir's loan. Actually, no, this is not Arvind and Balbir's loan. It is their wife's loan. You can see Mrs. Arvind loan and Mrs. Balbir's loan. After that, there is a reserve fund, investment fluctuation reserve, capital account, Arvind Balbir, and there is profit and loss account on the asset side. Provision for doubtful debt is also given. Arvind promised to pay off Mrs. Arvind loan and took stock at 6,000. Balbir took half the investment at the rate 10% discount. Book dates realized 28,500. Trade creditors and bills payable were due on average basis of 1 month after 31st March, 31st March, but were immediately paid on 31st March at the rate 2% discount per annum. Plant realized 37,500, building 60,000, goodwill 9,000, and remaining investment 6,750. An old typewriter written off completely from the firm's book, now estimated to realize 450. It was taken by Balbir at this estimated price. Realization expenses 1,500, show realization account, capital account of partners, and bank account. So all three account is required here. Yes.
Yes, sir.
Okay. You will try this question or should I solve it? Because you should, I think you should try it. And after that, if you are able to do it, that's good. If you are not, then I will solve the question right now.
Okay, sir.
But you have only 15 minutes because later 15 minutes I will need because I have to explain and then solve the question.
Okay, sir.
Okay. Okay, actually, take 20 minutes. I will solve the question with you, but I will not show you obviously. Uh, so just 1 minute. Okay, so only question will be shown here. Okay, so I am solving the question along with you so that I will take less time in the last. So you have 20 minutes.
Okay, sir.
Okay. there is any confusion, you can ask question.
Okay, sir. Sir,
Yes.
so how to calculate the amount for trade creditors and bills payable realize?
Uh, First, actually, we have to pay together both of these. So first, total it.
Okay, sir.
How much you got?
So
Yes, total of both
57,000.
57,000. Calculate 2% on 57,000 for 1 month.
So should I do 1 by 12?
Yes.
Okay, sir.
How much?
So 95.
95. Deducted from the total amount. That's
Yes,
it.
sir. Okay, sir.
Done.
No, sir.
Okay, so which part you're doing?
Sir, I'm only finishing the realization account.
Okay. So the balance two will take less.
Sir, I got the total as 2,36,950. Is that correct?
2,36,000.
950.
Okay, can you tell me the item name that you have written?
Yes, sir, in the credit side,
Just
it
one minute,
is.
1 minute, 1 minute.
Okay, sir.
Okay, now tell me.
Yes, sir. The credit side, I wrote buy trade creditors 45,000,
Okay,
buy bills payable 12,000, buy Mrs. Arvind's loan account 7,500, buy Mrs. Balbir's loan 15,000, buy provision for debts 3,000, and then buy cash account investments 6,750, book debts 28,500.
total cash
So I didn't calculate that separately.
amount. No, you haven't calculated total amount of all the asset. You have directly written in the final column.
Yes, sir.
Okay, no problem. After that,
Building 60,000, plant 75,500, goodwill 9,000.
75,200, 37,000 plant.
Yes, yes, sir, 35,500. I said it wrong.
Okay.
And then to Arvind's capital account stock 6,000, to Balbir's capital account investment 6,750, and to Balbir's capital account
Old typewriter.
of yes, sir,
Old
450.
7,000. Yes, 450, 6,007. Okay, in cash, you have written 28,500, 37,500, 60,000, 9,000, and 6,750.
Yes, sir.
Okay. So total should be 2,38,950. Actually, one thing that you have not written, uh, investment fluctuation fund you have not written.
Yes, sir.
So investment fluctuation fund is 1,500.
So will it come in the credit side?
Yes, investment actually, if you have written this, I told you that whenever there is a reserve and there is a related asset with that reserve, then that fund or reserve will be transferred to realization.
Yes, sir.
So there is an investment in the quotient. That's why
Yes,
investment
sir.
fluctuation fund will come into the realization.
Okay, sir.
Okay. Actually, still there is 500 less in your total. Can you calculate the total again?
Yes, sir, I will. Yes, sir, it was a calculation mistake. I'm getting 2,37,450. So if I add the investment fluctuation reserve, it will become 2,30,000.
So 2,38,950.
Yes, sir.
Okay, now I'm sharing the solution that I have done. Okay, so actually, whenever I solve realization account, I tick all the assets and liabilities to see that every liability is paid and every asset is realized.
Okay, sir.
Because in this question, Balbir wife's loan detail is not available for payment. Yes.
Yes, sir.
So I have written here, you can see Balbir wife's loan 15,000 in cash.
Yes, sir.
So this is your solution. We check it. Done.
Yes, sir.
So realization account you have. Now there is partners capital account here, and actually I'm sharing this page. Export. Okay, I've sent the account here. You can match with this. Okay. Now tell me if you have any doubt in this chapter. Ritika, your voice is not audible.
No, sir.
Okay.